I've got a special guest on here today that's going to talk about something that I know can change the way you build wealth in two different ways and journeys that Tim's going to talk about today. But before we get started, I just want to do my normal kind of disclaimer disclosure. I'm not an attorney, a CPA, financial advisor. We do not at Horizon Trust Company. We do not get compensated for any decisions that you make investment wise. And that's important to us. We want to give you some of the best people in the industry. And I'm in about a year and a half now, almost 2 years. I've been hosting this webinar where we give content information about self-directing. And I've noticed a lot of you that were chiming in. I recognize a lot of your names. And then there's usually, as always, we always check all the data, and about half of you are brand new to us at Horizon Trust Company and to these webinars. So welcome to you as well. Welcome to both of you that have listened to me and us and those that are new. So this came about because many of you have asked, hey, what do I do next? I've got an account set up at Horizon Trust Company. I've got money there. I'm sick of the stock market. I want to do something different. And what do I do, Greg? And we can't advise. I can't say, hey, you should put it all on cryptocurrency, like maybe an 18-year-old might do. And by the way, probably beating me in my retirement account, depending upon the day on which you exit. I can't tell you to put it all in real estate, but what I can do and what we've come to do is we invite special guests that a lot of our clients have used. And so I have nobody on here or ever host anybody who has not already basically have several, if not dozens or even hundreds of clients that already have accounts with us at Horizon, but then invest with them. And that's important to me. That's part of our due diligence. Everyone can put together a nice PowerPoint, but really what I like to see is action. People that are doing what they say they're going to do to our clients at Horizon Trust Company. So that is the case today. And before I turn this over to Tim, I'm going to introduce him, but also just share with those that are new real quick. Our goal at Horizon Trust Company is to teach you how to unlock your retirement funds and use them how you want. It's as simple as that. If you have an IRA, an old 401k, if you worked or worked in the past or even currently, like Tim in the Marines or in any kind of government position, those qualified plans that you had when you worked for those organizations, school districts, etc., do most likely qualify to self-direct. I mean, you can move your funds, all or a portion of them, from wherever they may be, typically in the stock market, in the traditional stock market, to alternative asset classes. And when I say alternative, it's alternative to the world, but to me, it's probably a lot more familiar. And so that's where I spend my time and energy. And so for those that are new, I just wanted to give you, I'm not going to spend a lot of time today actually on self-directing. I'm going to talk about how you can build your self-directed IRA, how you can actually scale with Tim here, how to get your $20,000, $40,000, $50,000 IRA quickly to scale to double when using leverage in a matter of a couple of years rather than a matter of maybe 5 to 10 years. And so, but if you're listening to this and you've always wanted to understand or get access or gain access to your retirement account and invest it in real estate, businesses, crypto, precious metals, whatever it may be, we allow you to do that at Horizon Trust Company. We've been doing it for 15 years. We have over $1 billion in assets, and we're really good at what we do. And you don't have to just ask me. You can ask our clients. You can look at our testimonials. It's super important to us. So that being said, I want to transition now over to Tim and introduce Tim. So Tim, I met years ago, and what I love about Tim is I guess he's got this incredible resume. And including, I got to throw it out there, he's funded and helped people fund over $3 billion in lending to different individuals that are in the real estate market. If you are one of those people that are looking for money to borrow inside your IRA or outside your IRA, you won't want to miss exactly what Tim's going to share with you today. He's got that, and also he's got a fund he's going to talk to you about as well. And so I don't want to take it all away from here, Tim, but he's not only successful, but what I love about Tim is he and I built our relationship, I think, frankly, based upon our families. We do these late night, Friday night text messages about our boys playing football. And so he is a football guy through and through. And I feel the same. When your kid's playing whatever sport it is, that is the most important sport in the world. Happens to be football for us currently. And so, anyways, great family man, successful businessman, and is a giver. And so let me introduce you, Tim, and let Tim kind of take over. He's got a presentation, and then we're going to leave plenty of time for questions and answers at the end. So please put in your chat. Tim's got some slides he's going to share with you as well. But let me introduce you to Tim Herriage.
Greg, thanks, buddy. Glad to be here. Yes, my ninth grader just made varsity at Texas Super 6A, which is a huge thing. And so we had 1 week of summer vacation, and he's already practicing 4 days a week. So that's the way it goes. No one likes to sit and listen to slides all day and look at slides all day. I have 19 slides. I'm going to go through them relatively quickly, and then we'll get into some questions. First off, if I can learn how to click the button, there we go. We're going to talk about several different things. Obviously, I'm not an investment advisor. I'm not an attorney. We're going to talk about loan programs. Credit is not guaranteed until you apply. There are more situations than I could possibly cover in a summary that will restrict whether any of the loan programs I'm going to discuss are available to you or not. I'm also going to discuss a Regulation CF crowdfunding. It is very important that you know that all startups and all investments are risky, and you should fully read all of the documents on the offering pages, including the SEC filings with the Securities and Exchange Committee, including the Form C. And we're also going to speak a little bit about some Reg D options that I have. And again, you should know that, in my opinion, no investment's safe. Do your own due diligence and invest wisely and get proper counsel. Here's the agenda. We're going to talk a little bit about Ternus, our team, and the truth about private money. So I bought a couple thousand houses. I don't even count anymore. It's not an important number to me. My wife and I will buy anywhere from 30 to 60 houses this year in the DFW area, Dallas, Fort Worth, also in Austin and San Antonio. We do that to build our wealth and to continue to grow. And frankly, she likes to flip houses and spend money at Home Depot. So that's just the life that I'm stuck with. I started loaning in 2003 because a mentor of mine brought me aside and said, "You are leaving so much money on the table when you wholesale these houses." And I just said, I mean, I don't have money to loan. And he taught me how to wrap financing around the wholesales. And quickly, I was making double the money by being a lender. And I really want you to think about, as I'm talking, some of you have larger accounts or have aspirations to get to a larger account. Really look at ways to make money with money and not always make money with your time. The biggest transition in my 23-year career has been learning that money is a tool versus a result. Many of us get into this, we're hard workers, and money's a result for action. And I want you to start looking at money as a tool. At Ternus, we're the investor's lender, and there's a reason it's plural possessive. It means we are owned by our customers. We partner with real estate investors to provide fast, reliable capital to help create wealth and build a legacy. One of our core values is service. And I always get goosebumps. I just did right now because the way I explained it to my team is we make millionaires. And it is the greatest joy of my life to help people like me that don't come from everything have financial security and success and a life maybe they didn't dream of. I built Ternus over the last 18 months. We have 37 people now in 4 states and on 3 continents. I have been lucky to build a mortgage company when mortgage companies are not cool. I have gotten talent that I never could have gotten whenever the mortgage market was booming. And what it's done is it's really set us up for success and growth beyond where we're at. And just another thing, always remember you're part of a team. You're never alone. I know Horizon Trust is really good at support. Lean into the support and the educational materials available to you. You have a team, whether you know it or not. So let's talk about real estate. I'm a big fan of real estate. It's where I hold probably 90% of my net worth in different asset classes, everything from single family to multifamily to commercial to land and some industrial. Most of it I invest in other people's deals now because I'm past the wanting to know all the addresses. Uh, it's actually funny. In Dallas Fort Worth, I drive past apartment buildings all the time, and I recognize the sign, and it's like, oh my gosh, I own part of that. It's been a great thing. Um, Big numbers make you feel small. There's over 100 billion in flips every year. About 40% use financing. That means 60% of people are paying all cash. About 1 in every 14 homes sold last year were a fix and flip project, and it takes about 160 days to flip. About 10% of the homes are then of the 1 in 14 are sold to buyers backed by FHA. There are about $6 trillion in single family rentals, and most are mom and pop investors. What you have to understand is if you own one house, you are in the 40th percentile. If you own two, you are in the 50th percentile. If you own three, you're in the 60th. If you get to 10 properties, you are in the 90th percentile. Everyone thinks that the hedge funds, quote unquote, or Blackstone, quote unquote, or BlackRock, even though they didn't buy any houses, bought all the houses. It is astronomically untrue. If you add all the institutional owners that own 1,000 or more together, they own less than 3.5% of the U.S. housing stock. They are irrelevant. This is an industry owned by us, the little guys and gals, the people that can go touch a home in their neighborhood, the people that can go make a decision. And I highly encourage you to get comfortable with the assets and understand that it is an open playing field for you. So the truth about money, no one has money. Everyone's money comes from somewhere else. Wall Street's money comes from insurance companies, comes from you, and Wall Street loans it to the banks and they loan it back to you. It's a big circle of transactions. And oftentimes people are afraid to borrow because they feel like they're beholden to someone. And I'm just here to tell you it is a false sense of security to be debt free. It is a false sense of security to try to build a portfolio without leverage. Many brokers act like they're lenders. They say, oh, I'm a direct lender, but they never even have the money to fund a loan. Many lenders work like brokers. Myself, we'll do about 10 million in loans in the next 30 days, and I'll only actually wire my money on about 6 million of that. The other 4 million comes from either my fund or third party partners that give me leverage against my loans. True balance sheet lenders are rare, and balance sheet just means it is your cash, you don't have any debt, and you're only loaning your cash. So this is a little bit of an IRA thing. These are the types of properties you can invest in with your IRA. We do not loan on all of these properties, but I have purchased all of these properties and invested in REITs, and I highly recommend that you not become a one-trick pony as you're growing your business. You have to understand, if you're using your self-directed IRA, you're not gonna own the property. Your IRA is gonna own the property for benefit of you. And there's a lot of things I'm sure you've started. You have to make sure you're diligent with tracking your expenses, repairs, taxes, making sure you and your direct family don't benefit from certain things, and understanding UBIT and all of these other tax situations that the thing I love about IRA investing, the IRS tells you what's not allowed, but doesn't tell you what is allowed. Like it's backwards. There are no rules. There's just rules. There's just don't do. Just be careful, educate yourself, because the last thing you want to do is lose your tax advantages because you used a Home Depot credit card that's in your personal name or something like that. So just be really careful, be diligent, set it up, have a game plan, and you can unlock some amazing potential in your IRA. Again, you can't self-deal. Don't be trying to, assign it to your uncle or from your cousin. Just don't do it. It's not worth it. The millions of dollars that you'll make in compounded appreciation is not worth a couple $1,000s of doing it cheap. And you can't use sweat equity and you can't use personal funds. So our different. We love to tell people no. I actually have sales contests on who can say no the most quickly, because what I know to be true after thousands of houses and I've taken out thousands of loans is the worst thing I can do is drag you along. We have to move with speed and simplicity. We have to be transparent because if you think I've solved your problem, you stop looking for money and I can put you up against a closing date that you can't meet anymore because I drag it out. So we on all of our loans, we promise you a quick no. We do not pull credit. Obviously, the IRA doesn't have credit, but even if you come to us with an LLC that has nothing to do with an IRA, we don't look at your credit because look, here's the crazy thing. I don't know what my credit score is today. I guarantee you it's somewhere between a 650 and a 750. And here's why. About every couple months, there's an old utility bill or credit card bill or water bill or something that they mailed to the wrong address, and I never got it until guess what? There's a collection account. And then I have to go fight it and I win eventually. And then I go back up to 750. And then one month, my wife and I may be rehabbing 5 houses and my Amex is maxed out. Actually, all 3 of them are maxed out. And it looks like I'm $1 million in personal debt. So I don't really look at credit. We do look at your background check. We got to make sure you're not a fraud, a felon, or a fugitive. We don't want to do business with bad actors, not necessarily people that may have made mistakes.
I want to interrupt because that's they don't ask your credit. I just want to reiterate. I know you just said it a couple times, but what I love that you just said also that is refreshing. And sometimes I have to hear it is you don't, or you give no quickly. If any of you are listening, have done a real estate deal, which probably half of you have and are investors, or you're looking to do it, this is one of the biggest, I think, fraud things that lenders do. It's not fraud, but it feels like it. And so, Tim, thank you for saying that. That is such a big deal. If you know right in the beginning, if it's a no, you can then move on to the different lender. But too many people get these maybes or we're working on it. And then a week later, you got to close or your earnest money's hard. So I just want to reiterate that little thing that you do at Ternus is actually a huge thing. So go ahead, Tim.
Yeah, we try not to use the acronym, but it's STD. It's speed, transparency, and dependability, right? Because ultimately, I'm someone you can trust if I move quickly and I'm transparent and I do what I say I'm going to do. And that's kind of the 3 core pillars that we operate on. We don't get appraisals on most of our loans because I started Turnus on a thesis 2 years ago. If I bought thousands of houses looking at pictures and comps, why can't I do thousands of loans looking at pictures and comps? And so I've built a team of competent professionals. Many came from my house buying business, and we can make a really quick valuation decision on the desktop. And what that means is many times a customer that gets us their LLC documents quick and does things quickly, we can close a new customer on a fix and flip in as little as 5 days. We've done it in 3, but that was a customer that literally hit send on the Dropbox link and we had everything. So most of us aren't like that. I'm not. My wife is. So just know we close really fast on our Turnus loans, and we have some even our DSCR loans, the long-term rental loans that we don't fund ourselves. We close those in less than 2 weeks, and no one else in the industry does. So speed is a huge thing to us. So loan programs. Our fix and flip loan, we have 6 and 12-month loans. We go up to 75 loan to value, but really like to stay below 70% of the after repaired value minus repairs. We always loan you all of the repairs. So if you're over your loan to value, it means you just have to bring a little bit of money down. But if your purchase and your renovation is at 70% or less, we'll loan you 100% of it. There's no down payment required because we again look at the asset. It's asset-backed lending. Everybody calls it hard money. It's asset-based lending. The asset is the collateral, not your debt-to-income ratio or your FICO. So, and we're really confident that if we have a 70% house, I think I've proven it thousands of times. I know how to go make money if I have to take it back. So we don't really worry about how much you have down. We have some bridge loans if you're midstream on a project and you need to maybe refi out of another hard money lender, or you paid all cash for it and you need to refi some of your cash out to go buy another asset. We can bridge you there. Same thing, 70 LTV. On the long-term rental loans, this is very, very important. So by the way, on the first two, 70 loan to value, there is no difference between if you bring your LLC or you bring your IRA. We do not cut leverage just because you're using an IRA. And that is huge, and most people do. Now, on the single family rental loans, couple disclaimers. On that, we have to pull the credit score of a guarantor because those loans, they're 360 months long. No one has enough cash to sit there and own that loan for 360 months. So we have to sell those to Wall Street. So you have to have a credit score above a 640. We do have to get an appraisal on the rental loans, and the maximum loan to value is 70%. So the normal rental loans through your LLC, you can go up to 80%, but on the IRA, you can only get 70%, which is still about 15 or 20% the normal to some of these other lenders out there that have letters behind their names. So that's a great loan. And then the hotel loan is a 60-day loan. Sometimes you find that house that the hoarder had and you just need to trash it out and stick it on MLS. So that loan only costs you a point for 60 days at 12%. And it's just a cheaper way to maybe trash out a house and resell it quickly versus trying to assign it. And then we have transactional funding. So in theory, you could take your IRA and tie up a house, and we could fund the loan or fund that transaction for your IRA. And on the same day, your IRA could sell it to an unrelated party, and all of the profit from that sale in that one day would come right back into your IRA, and you would have no money down, no money out of pocket. A lot of people wholesale in their IRAs. I always find it better to do a transactional loan in mine because I just like it. It's cleaner, and I get a real settlement statement that shows that I was the seller and I had a buyer and when I bought it. So that's just a little personal opinion there. So where do we live? Not where Greg lives, because the licensing in California is just really difficult, and the licensing in Nevada and Arizona are really difficult, and as is Oregon. And then there's Minnesota and Wisconsin. This map is growing month over month over month. Ternus is an 18-month-old company. So in January of last year, only Texas was filled in. And so we're doing a pretty good job, and we're going to fill in the entire map over the next year or so. But don't write us off because we can help you. And if we live on the premise, if we can't help you, we always try to point you in the right direction, because we're going to tell you no really quick, but then we're going to dip into my Rolodex and say, no, I can't help you, but you should call this lender, or I can't help you, let me refer you over here. And it's not about making a referral fee. It's because my thesis, remember, if I tell you no quickly and treat you with respect and courtesy, you're going to call me every time you get a deal. And that's what we're trying to do. So it's not about a referral fee. It's about pointing you in the right direction with someone that we trust, which means I trust it. The fix and flip loan, little bit of details, 50,000 to 500,000, up to 100 LTC, which is loan to cost, not to exceed 70% of the after repaired value, the ARV. We do make sure that you have enough cash in your IRA after the closing cost to pay 6 months worth of interest. It's very important. So it's not just your closing costs. We're going to look at your statement of account and make sure that you can actually afford the project, because I don't want to take houses back. It's so far 200 loans in 18 months. We haven't taken a single house back. Part of that's because I don't go over 70%. So what that means is when someone gets in trouble, they always have enough equity to get out of the deal. And sometimes they may lose money, but at least they don't get a foreclosure. Quick point on the IRA loans. We do require what's called a bad boy carve out. So it's basically a personal guarantee in the event you commit fraud or are fraudulent. And if your if Horizon Trust doesn't allow it, which I'm pretty sure they do because I've done loans with them, if for some reason legal changes ever, what we do is we just lower your loan by 5%, and then there's no guarantee. But there's traditional bad boy carve outs are pretty standard in non-recourse loans. Uh, it says full recourse loan there. That is should not have been for this presentation. Normally that's what it is, but uh, these are actually non-recourse, but have an individual, a warm body, sign a guarantee in case they commit fraud. We can come after them. DSCR loan. I'm not going to get into this. Basically, the property qualifies on the cash flow of the property, not your debt to income ratio. And we can go into up to 80% if you're through an LLC. If you're through your IRA, this is capped at 70%, which is still really good leverage. And you don't get a lot of add-ons of pricing. So, I mean, these are still pricing out in the low 7% range on a 30-year fixed loan to your IRA. So literally with Ternus, you can come over here and buy the asset, get it renovated, and then come back, refinance it. You know, say you got $10,000 out of pocket on the deal. Now you're cash flowing. It's in your IRA. There could be some UBIT taxes. You're going to need to consult a qualified attorney and
I'm going to
CPA.
add something just real quick, Tim. Also, these last few slides, if you can zoom in a little further, I don't know if you can or can't. I don't know if that's an option.
I've got such a large monitor. I'm sorry.
Okay.
Let me do it like this.
If not, by the way, I assume Tim's okay with us sharing the PowerPoint
Oh,
with
yeah.
you. We can send it to you as well. Anyways, oh yeah, well, let's see. Even that's better, but I know we're seeing your whole deck there. So there, that seems better for me at least. Yeah, good. I saw a couple people ask for it to be a little zoomed in. Yep. Okay, good. Anyways, go ahead. Sorry, Tim.
No, you're good. You're good. Sorry. I've got a 48-inch monitor. So
It looks big to you.
yeah, it looked great to me. So yeah, so I'll just go back through, let you see them. But yeah, the Horizon Trust team can send this out. DSCR. All right, so kind of last two slides, we'll get into the questions. We actually are selling 10% of our company for $5 million. And we have had a good bit of my friends that have Horizon Trust buy stock in our company. The minimum investment's $1,000. And you get 20% off all loan fees. So on average, you save about $400 per loan. So what I tell everyone is like, look, if you're going to be in this thing for the long haul, buy some stock. After your third loan, you basically got free stock. And that's the way I look at it. But we've had investors buy up to 100,000 in stock. Most people are buying 1,000. The average investment, just for fun, right now is right at $3,800. So it's one of those things. Part of my vision is to build the largest customer-owned real estate investment lender out there. And the more money we raise from you, the more we can loan the way you need us to. Because I could go raise $100 million from Wall Street today, but then I have to loan the way Wall Street tells me to. And I'm tired of that. So I'm doing it this way. What are we using the money for? We use it for loan funding and also our tech stack. We're about to roll out Plaid and some automated valuation models and apps and all this. Really, really investing heavy in technology so that we have efficiency and speed. It's all about speed for me. And then we have a cash flow fund. This is actually my favorite vehicle right now. Oh, wait, sorry. So the Reg CF, that's crowdfunding. You do not need to be accredited. You do not need to be anything. You just need to have $1,000. The cash flow fund is for accredited investors only. It is a 506c offering. It pays an 8% preferred return that we pay monthly because we're collecting 12% interest coupons. And then every quarter we distribute profit. We charge a 2% management fee, and then the profit that's left over, if you invest 50,000 is the minimum investment. So 50K to 500K is a 60-40 split, 60 to the investor, 40 to Ternus. 500K to a million is 70 investor, 30 Ternus. A million plus is 80 to the investor, 20 to Ternus. The cool thing about this fund that makes it really different is it's only a 6-month lockup. So if you had 50,000 sitting there and you're an accredited investor and you're still in your due diligence phase and still learning, You can go ahead and buy 50,000 in this, start earning your 8 pref. The target return is 12 to 15 by the time we apply some leverage and we get transaction fees every time we wire and get a payoff. And the beautiful thing is most funds are 12 or 24-month lockups. It's only a 6-month lockup because I only do 6-month notes. So I don't need to lock you up beyond that. And after that, all you do is send us a 30-day notice. We send you your money back in your final return. Bada bing, bada boom, we're done. And so I'm personally actually, this is a brand new offering. I'm literally waiting on the subscription agreement from our fund management company. We use a company called Opus Fund Management that does some of the larger debt funds in the nation. And I'm going in with the first 500,000 into this debt fund. And I'm trying to talk my wife into $1 million, but Greg, she said we've already invested enough in this right now. She wants to wait. And she wants to buy a condo in New York. So there's a little bit of that. That's what I sold her on the lockup. The nice thing about this is, although I do encourage all of you that want to grow your IRA account to learn how to be a private lender on your own. The problem with that is if you do one loan, you have risk in one loan, one borrower, one geography. The beautiful thing about the cash flow fund is it is the only fund we fund our loans with, and it's spread across 20 plus states, the same underwriting. And to date, after 200 loans, 18 months, we've had 0 credit losses, 0 servicing losses, and 0 foreclosures. So although that's not going to maintain, we'll end up having foreclosures, and we have a couple in bankruptcy right now. The beautiful thing is we're first lien mortgage at 70%. So it's pretty easy to get your money back. That's it. Greg said to leave 30 minutes for questions. I left 25.
You did great. No, I took 5 of your minutes. So no, that was impressive. Look, there's a lot of questions. We're going to get to them right now. And even before then, obviously you're going to get Tim. We're going to put in the chat his contact information for his team if we haven't already. For those of you who want to borrow, I just want to reiterate a couple things and then open it up to question answers. Over the last few years, this has been one of the really major topics that people need to hear about. Why? Because if you're listening to this, most people that want to get in real estate just don't have enough money in their IRA. They like the idea, they like the concept, but they might only have $50,000 or $150,000. But they want to buy a property in Arizona that's $200,000 or $300,000. This is lending and borrowing, your IRA borrowing to buy these assets is a game changer. It's all about leverage. Just do some simple math. If I have a $100,000 IRA and I go buy a property and I go flip that property, let's say I can make 20 grand on a flip, $25,000 with no debt. I go buy another property that's 200,000, but I put down 100 with my IRA, borrow from Tim, even though he'll lend me more. Let's just say I'm just borrow 50%. That would be a hell yes. He'd probably say yes in minutes and not days. And so 50%. So now we're buying a $200,000 asset with the same $100,000 IRA, right? And now we go flip it, and now there's a $40,000 to $50,000 gain. That $40,000 to $50,000 gain and that is a whole nother discussion for another day, but we can teach you about it. But I'm just going to throw out $5,000, right? So you pay a $5,000 in taxes because you have to pay some taxes on the gains of the debt. You end up with a $40,000 to $45,000 profit in your IRA, a 40 to 45% rate of return in 12 months rather than 20%. So people ask me all the time, okay, they want to, make these 20 to 30 or 40% rate of returns, but still not have very much risk. Well, first of all, there's always some risk. But second of all, leverage is the way that people can really scale their IRAs. So if you're listening to this and your IRA is too small or you think it's too small, not only can you borrow, but you can also syndicate. My son's a good example of this. My son buys in Jacksonville, and he buys in little pockets in the South where he can afford $100,000 fix and flip, right? He's not buying in California. One, because lenders hate it. Two, because there's no a beginner property is $1 million. But so for those that are listening here that are looking to scale your IRA or build it or looking to buy into an asset that you don't have enough capital for, Tim and Ternus are a great solution. And I see them literally funding lots of friends and people that I know every single day. And so that's the one side, obviously. And Tim's information is in the chat. You can contact him and his firm, as well as if you're looking to invest. Well, what I like doing, what Tim just talked about now, and I used to be a huge borrower. I now love just to lend. I like going in people's funds that are doing all the underwriting, doing all the work. I don't mind giving up some upside because there's also giving up. I'm getting back time in my life when I'm not having to do all the due diligence, and so a lot of value there as well. So I just wanted to give a little summary for those of you that are new and or new to borrowing and wanting to understand more at non-recourse. One thing that Tim, I'm not sure if you're familiar with this too, is if an individual actually buys and borrows using their self-directed 401k, they actually don't pay any UBIT, which is pretty cool.
I've heard that. I just don't know anything about it.
Yeah, well, I've been doing this for a long time, and someone kept, it came up a couple times, and finally did my research on it, and it's true and very interesting. So, and that's not hard and if you want to learn about that, we can help you set up a self-directed 401k. Probably a 30 of you already have that with us at Horizon Trust. That being said, let's jump into some questions and answers because there's some really good ones. And I don't know if am I leading this, or since Alex, you're on here, I don't know if you or Danny are leading this, but I have no problem jumping in. It looks like it's all in the chat. So, or do you want to take I'm just opening it up here. Lots of questions.
I'm happy to fly.
Let's.
You want me to grab the joystick?
Yeah, go for it.
Let's see. That's an IRA question. Yes, I lend on purchases where the rehab exceeds the purchase price. Funny one in Cleveland, Ohio, the initial loan amount was $6,500 and it needed $80,000 in rehab because it was a bridge. They had paid cash for it, and I couldn't give them a zero loan at the beginning, so we had to make it $6,500. So we have no problem where the rehab exceeds the purchase. As a broker, can we commercial funds partners and get commission? No idea what that means.
Well, I'll take a stab. I'll take a stab at that one. If you are brokering a deal, you can get commission fees, but if you're brokering it and your IRA is part of the deal, you cannot get commissions and fees. You got to keep anything from salaries, commissions, and anything related to the transaction with your IRA. So you cannot be compensated. That being said, I've had lots of partners. For example, let's say Tim and I are business partners. We both have IRAs. I can lend or do a deal to Tim with Tim, and with my IRA, and Tim can get a management fee and a real estate fee, and vice versa. And I've seen a lot of partners kind of lending to each other, and that is compliant. That's fine.
Yeah. Typical fees for refinancing a DSCR. So the DSCR, I'm going to give you a broad overview to how to understand debt service coverage ratio loan. It's a loan. It's a 30-year mortgage based on the property income, not yours. There are three levers that you have to pull. One is the loan to value. The lower the loan to value, the lower the rate. Two is the points you pay up front. The more points you pay up front, the lower the rate. Three is your credit score. The higher your credit score, the lower the rate. And so the answer is it depends, but it depends on, or if you're trying to keep your fees down and you want to pay 8%, there can be zero fees and 0 points. If you want to pay 2 points and be at 7%, that works. If you want to pay 4 points and be at 6.5, that works. So it all changes. There's a lot of mechanisms. And the good news is my team is fantastic at getting that done. If you live in California and you're buying property outside of California, I can help you. I just can't loan on property in the state of California at the present time.
Yeah, and look, people ask me often how I got into this business and in real estate. It was I leveraged and borrowed money, and it was all on like 12 and 2 kind of rates, right? I didn't have the Tim Herriage at the time that understood real estate the way he does and so quickly. And so if you're looking to scale again, and I know we got his contact information here in the chat. uh, definitely should be in your Rolodex if you're looking to scale. It's your way of turning 20, 30, 40 grand into, 60 to $100,000 in a year or two. So a couple other questions here. Yes, we can send you the slides, Tracy, so you can understand the two investment opportunities. You also can email him, or you get the number there as well. Let's see here.
On the monthly interest payments, yes, you get monthly interest payments on the debt fund. You do not on the stock. And then, Greg, do you have the current accredited investor definition? I think they just updated it, didn't they?
I don't think it's approved yet. Still think it's the old 20-year-old, 30-year-old accredited, still $1 million, or
Okay.
you make 250. And but yeah, you've got to be a net worth excluding your home, the home you live in, of $1 million, or make I forget the coupled number, if it's 250 or it's
No, it's
375.
300. It's 200.
300.
It's
Yeah,
200 individually or 300 combined with the spouse,
there you
and
go.
have a belief that you're going to continue to make that.
Make that much of it. Yeah. Andrew, does it have to be a Roth or traditional IRA? For if you have a traditional or Roth, you can convert, or if you have an old 401k, you can convert it over to a traditional, or we can help you convert it to a Roth. So what we talked about today when self-directing, any kind of IRA qualifies. If you have a simple SEP, Roth, traditional, we can self-direct it. And if it's not a Roth and you get it set up with us, we can help you get it converted to a Roth. Obviously, you need to talk to your CPA to make sure you don't get bumped up into the wrong tax bracket the wrong year. But we will make this as seamless as possible. We do it every single day. So we'll give you the input or education, and you go back to your CPA and make sure that works with inside of your personal situation. Okay, let's see.
You do not have to be. Oh, I already answered that one. On the profit split on the cash flow fund, it's a waterfall of money. First is direct fund expenses. Next is investor preferred return. Next is management fee. Next is profit split. So it's just a waterfall. We pay the funds bills first, then we pay the investors their 8 pref, then we pay ourselves a management fee. Whatever's left goes along the tier you're in.
Graham. Can you use your Roth checkbook LLC? Yes. If your question is if you want to use that to borrow, and Tim, correct me if I'm wrong, but the checkbook LLC is the LLC that's going to buy the asset, and then they would, because it's asset-based lending, Tim would lend to the LLC, but he knows it's owned by your IRA because they would ask for the LLC docs, and so all the LLC guidelines would apply there.
Correct. And yes, the cash flow fund is new. It does not have assets yet. It will start to have assets the minute it's formed. Uh, like literally, we've got millions sitting on our balance sheet right now that are about to go straight over to the fund.
Tim, can you tell us, like, what is the average client of yours from both perspectives, both when someone's borrowing from you, what the average deal looks like, and then also on the investment side, what's the average client that's investing with you in the fund? What is that avatar?
Well, so yeah, so I'll start backwards. The shareholder, the stockholders, the average is right at 30. It's either 35 or 3,800. It's right less than four right now, 4,000. The average fund investor we're talking to is around 200,000. That's what most people are talking about. I always recommend you spread your money out. If you only have 500,000, don't give it all to me. You got to spread it out. And then on the average investor, they've done 2 or 3 deals. The average customer has done 2 or 3 deals, and our average loan amount's 167,000. So we're different in that we don't negotiate a whole lot on rate and fees because that's just kind of cheap to me. To me, I would rather build a relationship. So the big expensive houses that go to Kiavi and Rock and all the big guys, we don't loan on those, and we don't really care to. We want to loan on workforce housing in working class neighborhoods. So our average loan amount is actually 167,000, which is pretty low for the industry. The industry average is around 212.
12. Okay.
Average rehab right now is right at 55,000.
I mean, that opens a door to almost everybody. I mean, our average client that opens up with us has 90, I think 90 something $1,000. So everyone that's looking to, and 70, and just so you know, as far as those that are listening and or new with us, 70% of our clients at Horizon Trust Company are investing in real estate. Now, real estate's vague, right? It could be syndication or a fund, but a lot of, flips and wholesaling and Airbnbs, and you can do that with your IRA. So most of our clients are wanting to do bigger assets, but just don't have the lending option. There's two other resources that we have sent people to for borrowing, but I do know that they typically only lend 50 to 60%. And so Tim explaining how they go up to 70, it makes a big difference, believe it or not. For those of you that have done a lot of real estate, know like an extra 10% can make or break a deal. Maybe not break a deal, but make or break in the excitement of the profit of the deal and the cash flow of the deal. So, the more they
Well,
lend, obviously, is the better.
it definitely modifies your return and reduces your cash available to remedy any issues. So it's if you take a 70% loan out, kind of the calculus is we're going to look to make sure your IRA, say you take a $70,000 loan out on a $100,000 house, and that includes your rehab budget. We're going to look for you to have about $7,000 in your IRA because you're going to pay about 2% in closing costs. And then at 12% interest, I need to make sure you have 6 months worth, right? So we're going to make sure you have, it's basically a point a month, another, 6 times 7, 4,300, $5,000. So we're really good rule of thumb. If you're looking at doing a loan through us is you can afford a project that is about 10 times the size of your account, and that's purchase and renovation. That's not the after repair value.
Mm-hmm. No, that's
I
great.
would probably look at 20. If you're new, I would look at 20. I mean, at basically 5 times 20. That way you have 20% cash because you're probably going to make some mistakes. If you're still getting after it, maybe go at 6 or 7 times. Just don't over leverage. That's what I always recommend.
Yep. All right, couple here. How about buying a business? Yes, you can use your IRA to buy a business. There's also some rules on what you can and cannot do. You can't buy a business and then be the one working in the business, and so it's got to be more passive, or you'll have different taxes associated. There is some workarounds on that, but in general, that's the rule of thumb. You can use different corporations, not an issue. I like this question. It's a broad one. You see it there from Samantha, Tim. Is it actually worth investing in real estate nowadays? What do you say on that, Tim? That's the big question.
Look, I mean, the answer is yes, and the answer is no. It's a very large country. And there are certain areas where, personally, my investment thesis of working with starter homes doesn't really work. I like to look at population incline and decline. I like to look at property tax rates, rent rates. Are rents still going up? If you have a market in the US where rents are still going up, I would argue that's probably one of the strongest markets in the nation. Most of them are flat to down. If you have a market where the median home price is still going up, I would say yes. Now, if you're in a market where rents are going down and values are going down, I would say now may not be the time, but it's getting really near the time. So, because that industry indicates distress in the market that's been continuing for 2 years that will eventually end, and then it always goes back past the previous peak. So, it's always a good time to invest in real estate. It's not always a good time to buy every property.
Yeah. I would, my 2 cents on this subject is, I mean, Tim's definitely more of an expert than me in the subject. I lean on uh, not getting out of my lane. And so, and every time I do, I make mistakes, meaning when I chase like something that's different or really exciting in a different demographic or a different people, when you got something or somebody or in an area that's working, just to scale it with that person or with that in that city. And for me, real estate's always been good. Sure, I had 2008 happen to me, and there's definitely been some hard times. But when you're dealing with these smaller loans and smaller properties, and if they can, worst case scenario, break even, you're going to make it through the hard times. But I would stick with individuals, don't go into areas or people, or like, I can't tell you how many times I go to a conference and someone does a presentation on, I think someone even mentioned it on the opportunity zones. Like, it sounds great, like the slides look incredible, and it is great if you know it and you have the people and the politics and the like. There is a whole process to the opportunity zones, and I just use that as an example. It's not my market. I don't have contacts there, so I'm not going to go there. So that's my 2 cents about about real estate. But I'm a buyer still in real estate for sure.
Trying to
All right.
trying to grab some of these other questions.
We do not have a maximum per borrower. Great. I think we're nailing here. You and I are tag teaming this pretty well. Checkbook LLC, we've hit. Any other questions? Look, a reminder here too. So Tim's information's here. Our link here as well. You can contact us at Horizon. Many of you are clients of ours. If whatever you need or questions you have regarding Tim Herriage and his presentation or communication, you can always contact us, myself, or my team, and we'll connect you with them very easily. They're hands-on just like we are. So that's not a problem for those that want to do that. Let's see. Any other questions anyone's got to wrap up here? Tim, you went quicker than I thought, but I thought you're gonna go. So this was perfect.
I think we all are working on a tight schedule these days, and I respect people's time. And I know how hard it is to get away from work or whatever you're doing in the middle of the day. Kids are home for the summer, so I just tried to blow through it. I'm putting another email address down in the chat real quick for everybody. If you are thinking about investing in one of our other things, the cash flow fund or the stock, just email IR. It stands for Investor Relations. Just that way I can make sure that you're answered the proper way.
Perfect. All right, I see one last question here. Are there penalties for moving your Roth IRA rollover from a previous job? No, there's no penalties. You can move over your Roth as long as it goes from an IRA to a Roth IRA to a self-directed Roth IRA. There's no penalties, and so you can start investing. So look, we'll wrap up here. I just want to thank everyone listening in today. This is such a good subject. There's so many people that I know want to hear this. If you got others that want to hear this that weren't on today, let us know. We can send you the link. We're going to post it as well for those people to find us in our data as far as in our investment corner. I'm sorry for all of our clients. Thank you, Tim. Thanks for spending time with us today. Thanks for sharing and also being such a good giver. Your content is always good. Like I know that no matter what the case is, regardless if they're a client of yours or not, you are there to help people succeed in real estate, and that's hard to find. So thank you, Tim.
Yeah, man. Thanks for having me. Thanks for trusting me with your network. Everybody, look, not only am I the founder, I'm also a customer. I've taken about 15 loans from the company. 15 of the 200 were me. I'm the guinea pig for everything. My email address is the same as everyone else's at the company. It's just my first initial, last name. If you need anything or you're running into any problems, just let me know. We hold everybody accountable. And I will share this real quick. I got 4 minutes. Yep. Our core values, we have 5 of them. I resisted them. Greg was in the room when I finally capitulated and said, fine, I'll have core values. Because they told me I had to have core values at the mastermind because it guides your team on how to make decisions when you're not there. And I said, okay, I can get behind that. It's not something stupid I'm putting on my wall. But I'm also a Marine, so I make everything dummy proof. So we came up with an acronym, STARS: speed, transparency, accountability, respect, and service. Speed, time kills deals. Transparency, we're not going to yank you around. We're going to tell you no quickly. Accountability, I think, is a fundamental flaw in America right now. People don't own their own stuff. We're going to own our own stuff. Respect, I'm going to respect your time, and you're going to respect my people. We're going to get along great. And then service, we make millionaires. Whether you use us or use someone else, buy real estate. It's changed my life, and I hope it changes yours.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.